our CEO, Michael Harding, and head of Blockchain Sensei, Mergers and Acquisitions, Real Estate and Events, Zishan Haroon, who is currently at the airport. Tell them what you're about to do, broski.
Hey guys, what's happening? So currently at Heathrow Airport on the way to East Africa. Gonna first go and conquer Mount Kilimanjaro, then hopefully do some business in Zanzibar.
Nice.
Amazing. Nice. And isn't that the second biggest mountain in the world?
So that is the tallest mountain in all of Africa. So just over 5,000 meters. So it's going to be a good one and good to conquer. Get that off the bucket list.
Is this your first time in Africa?
First time Africa, yeah. Yeah.
Oh, amazing. I'm jealous. Yeah, okay, people. So it's currently 2:41 p.m. UK time, Tuesday, the 24th of January, 2023. Welcome to another episode of Technically Speaking, where we break down the markets. Please do tune into our 2 free webinars every Mondays and Fridays, 8 p.m. to 9 p.m. UK time. Register your free tickets in the blockchain.sensei Instagram bio link tree. Before we break down the markets, quick disclaimer. All our content is for education, information, and entertainment purposes only and should not be considered as investment advice or a recommendation to buy, sell, hold any assets nor place any trades. Please always do your own research. Our content is intended and should only be used for informational use only. It is very important to do your own analysis before making any investments, which should be based on your individual circumstances, including trades. You should always take independent professional advice from a professional advisor. Neither myself, Zishan, Michael Harding, or anyone currently at Blockchain Sensei team as of the 24th of January 2023 are financial advisors. Now, alternatively, independently research and verify all and any information you may find in our show that you wish to rely upon, whether you may wish to make an investment decision or otherwise. All investments come with a very important thing called
risk.
Therefore, you should always do your own
research.
We are not financial advisors again and do not intend to be perceived or received as financial advisors. I'm not dressed up like a financial advisor. Financial advisors don't wear hoodies, right? Working, as far as I'm aware, however, we are working in collaboration with several accredited advisors. If you're unable to mitigate your risk, please contact us immediately so we can refer you to an accredited financial advisor. You can tweet us at blockchainsen, Instagram us blockchain.sensei, or email us hello@blockchainsensei.com.
Big. So massive love to Voice of Crypto for putting this episode out on their channel as well. Really appreciate you guys. I'm going to let you guys take today's show away.
Yes, sir.
Bye.
Okay, cool. So Miss Harding will be in the background. So let's quickly have a look at the stock market. Obviously, Bitcoin's gone up by a lot. Now, here's a quick tip. Most crypto investors, i.e. people who got into crypto in 2020, 2021, got into the hype, first asset they invested in was crypto, they'll typically look at their individual coins first, or if they're a bit smarter, Bitcoin or Ethereum, or if they're really smart, the total of crypto. But it's very important, and this is why we teach at Blockchain Sensei to always follow the money, which is why we look at the stock market first. So let's look at some recent activity within the stock market. Let's rewind it back down to Christmas times. 25th of December 2022, myself and Zishan did a 25th of December Technically Speaking special. Since then, we've seen the stock market bounce up by approximately 7% in a month, which is nothing too crazy. If we just compare that with the VT, which is almost the same as the VTI, around that kind of less than 7 to 8% jump. So that's nothing too crazy. What have we got here? Have a look at the RSI. Let's switch it to daily so it's a little bit more reliable. We can expect a little bit of a drawdown in the stock market. So let's just have a look. So 23rd December, we were down here. We got up, and then there was a bit of a drawdown after the RSI hit around the 60 range. I like to call I like to call the third. Well, obviously everyone knows that 30 is an indication of undervalue, 70 is an indication of overvalue. But I also like to have a look at the 60 to 70 zones and 30 to 40 zones. So I do expect a bit of a pullback in the stock market. Also, we have a lot of major companies in the S&P 500 releasing their earnings reports. Was that 20% of the volume, Mr. Harding? I believe you said within the next week or so.
So it's 20% of the total market cap of the S&P 500 is reporting. If you just click on the S&P chart, let's have a look at how that's shaping up. And there's a really clear downtrend as well. So let's see if we've broken out of that downtrend now. I think it's very likely that we might have, but let's see what happens.
Yeah. No, I can definitely see that. Dependent and obviously where things go will be dependent upon how good those earnings are. Let's have a look at some other indicators as well. Let's have a look at some moving averages. Let's see if there's anything significant that we can point out. Now we can see that as of 10th of January, we've seen that the stock market has broken the 200-day moving average, which for a very, very long time, it was performing under. So we can see that stock market started performing under the 200-day moving average as of 29th of March 2022. Performing under, and it's literally only in recent times. So that was 13th of December. We touched over the 200-day moving average. Of course, during those times, the RSI was overvalued, not 70 overvalued, but floating over 60 overvalued. We had multiple confirmations, so we were expecting this drawdown here. There was a level of support which I didn't quite map out. Lovely level of support here, which was the previous resistance in 2020. So this move here is something that, you know, isn't groundbreaking. Let's have a look at the S&P 500. Also, the S&P 500, pretty similar to the stock market. We can see that we've broken the 200-day moving average, which could be an indication of potential upside, but it could be a bull trap, and we could draw all the way down to maybe around these kind of 3,782 levels if earnings reports are negative, and also dependent on if they decide to magically turn on the tap for quantitative easing, and or change interest rates again, which they seem to keep lying about. So FTSE 100, let's see if there's anything exciting happening in the UK market. So excitingly, the UK market is performing pretty well, to be honest, in recent times. Let's have a look at this in the long term. Where are we? This is the funny COVID dip. Okay, so guys, I think today is a relatively historical day, because are we on new FTSE all-time high? Not all-time highs, but all-time highs since a very long time. Oh my God. Is that historical high? Is that no, not quite. Okay, so this could be an interesting time in UK history. I'm not saying long term I'm bullish on the UK economy. However, I can see that very, very recently, and I didn't actually spot this up until right now, as of the 16th of January, which was only 8 days before filming this, I just want to confirm this. Did we reach FTSE all-time highs or almost all-time highs? Was that the all-time high? No, the all-time high ever was on around May 2018. So this is an interesting time for the UK economy. There was some interesting.
Whack that support into it's a little bit clearer for people. Yeah, just on the top.
Will we break FTSE all-time highs? Well, we've got a little bit of inside information. You guys may or may not have heard, and I want you guys to do your fundamental research on this, is research and development tax rebates. So basically, this is a government scheme to incentivize innovation, where companies that invest in innovation, whether it's artificial intelligence research, e-commerce, etc., can get a percentage of their company expenditures back. And I believe that this is a move by the current UK government to incentivize innovation. So we could be seeing FTSE all-time highs in the near future if things continue to progress within the UK, and if the pound sterling starts bouncing up, which it looks like it is going to bounce up a little bit. If we go over to this, let's just go over to the Forex chart a little bit.
I would disagree on that because the RSI is crazy high. If it does explode out of that, I'll be very surprised.
That's why I said could. That's why I said could, because it's not like we're down in the dumpster anymore. And then if you look at GBP USD, basically, if pound sterling goes back to, I would say, June levels, if pound sterling can get back here, I don't see why the FTSE couldn't smash all-time highs. Would you agree or disagree on that?
I'd agree, but I just don't see how.
Ninja, for that to happen, the dollar would have to decrease in value.
In value, yeah.
And I don't see
that is unlikely, but we can always see bounces. We can always
yeah, go to
it can always touch for a second.
Go to the DXY. Yeah, because the DXY's hit a support. So just where it is now is a support line. So, and this actually affects crypto as well, because it messes up.
Would you like to explain how we're starting?
Yeah, so the DXY affects crypto probably the most out of everything, because it changes the costs for developers. Because if you're paying developers in USDC or USDT, that's meant to be correlated to the dollar. If the dollar goes up to, like it did before, at 114, which is the average value of a dollar, then it means that you're paying pretty much an extra $14 per, like, 14 cents per dollar. So it's just not cost efficient. If you're paying someone 100K, that's an extra 14K that you're paying people for no reason. Whereas if the price comes down, it means that developers are cheaper, and it means that USDC is technically a better tool. So that's why I think it affects that. But if you whack that support line in, there should have been a support line that I saw before.
What,
yeah.
like there?
Yeah, look at that. Just around there, yeah. So
yeah, we can see
if we break below there, then it would make sense that Bitcoin goes up. Then it would make sense that the FTSE goes up. Then it would make sense that everything goes up. If we don't break, and that would probably also come with the earnings. So there's like a few catalysts that can affect everything right now. And it's just it's like a domino effect. Let's see which ones play out, really, I guess. But yeah, let's go look at some cryptos.
Okay, you want to cover Dow Jones, Nasdaq? We'll skip them. Gold.
Yeah, skip them.
All right, cool. So have a look at Bitcoin. So we've broken this 200-day moving average. The zone that I'm really looking for is, are we going to smash 25K? So this is my basic prediction, because two things that can happen. We're going to hit 25K and we'll smash through it, or we'll hit 25K and then go down. It's dependent on macro conditions. I see this 25.3K as a kind of like golden resistance and support. being that it touched back in May 2022. I do expect some kind of drawdown because this RSI is literally the highest it's been since back in January 2021. So that is a long time since it's ever been this high. If it does break through 20, I think it's more likely to not break through than likely to break through. That's my sentiment. But because I just think as soon as you're here, you're so far from that 200-day moving average, and that kind of space between the price and how much is it above the moving average. For example, we would have to be 20% above the moving, performing above the moving average. And the last time we performed 20% above the moving average was, I mean, that was way more. Kind of around like late December times, and we've literally been performing under the moving average ever since. So I feel like this is going to be a key zone to look out for. Let's have a look.
Once it goes over 25, I think everyone's going to FOMO in, and I think it'll FOMO up to like 40.
40's high, bro.
Yeah.
What you mean, like?
I think, yeah, that's what I think will happen. I think just if you go back there, go back down a bit, where you just was that resistance. I think there's going to be loads of people shorting it at 30, and then I think it'll actually get up to like 45, 50, and then dump all the way back down to 8. Because people are going to be pissed. Like, people are going to be so like, oh my God, I've missed out. Gets to 25, everyone's just going to pile in.
Yeah. If we hit this zone here, and then I see the RSI, let's say it goes down a bit and then goes up, and the RSI is nothing crazy, like the RSI is still playing around here, then yeah, I feel like we can keep moving up.
Definitely.
But yeah, Ethereum. Okay, so
That's
yeah, I feel like Ethereum has. Yeah, I feel like Ethereum has a bit more to go, because if you look at Bitcoin, I don't know if this is like a valid way to do TA, but I like to have a look at how much percentage is above or below a certain moving average, and right now, 11%.
Go to the ETH USD one instead of ETH Binance USD.
Isn't it the same?
It is, but just for the sake. Yeah, it's both 11%.
It's around the same. It's around 11%. Again with ETH.
Wait, go back to your notes then. Look what your notes said. Fake bull run then crash.
27th of July prediction, 1,700 ETH next few days, fake bull run then crash.
That's what happened.
Oh shit. That's crazy. I forgot I wrote that.
Let's see if that happens again.
Okay, cool. Yeah, no, that is quite
That's
interesting.
a crazy resistance there though on ETH.
What you mean? You mean
just at the top where you are, where the price is now? Yeah. But you just, no, lower. There, look at that. And it started turning already.
Yeah. But Bitcoin seems to be breaking through it. Bitcoin seems to be climbing a bit.
Interesting.
You know what to think?
Opinions.
I don't know why I feel. Sorry, go on.
Asking Zishan what his thoughts are.
So if you look at, so that big red candle is the FTX crash, and that area, yeah, so the only people that really move candles like that are big institutions and hedge funds, not small people like the average retailers. So that area is key. Same as when you look at the Bitcoin chart, around about the same sort of dates, you've got the same crash, FTX crash. So that area is key. So you're going to need to see either it break out of that and make a lower low and then a lower high. So you want it to go from, so currently it's trending bearish. So you want it to flip bullish by making new higher highs and higher lows to sort of start accumulating. But with, you've also got interest rates going to be increasing, Bank of England and also Central Bank of America. I'm just going to share my screen 1 second, guys.
Go and give him the Z Shanty.
So one thing to note is the next Bitcoin halving, you've not got it until May 2024. So you've still got plenty of time to sort of accumulate as much BTC as you can. I'll just go over interest rates, because interest rates sort of, they affect everything. So brace yourselves, another interest rate hike in the UK. I haven't really seen house prices reflect interest rate hikes as
That's
of.
so interesting that you just highlighted that, because
Yeah.
that would mean that the DXY would bounce up, and it would mean that the FTSE would bounce down.
Yeah, I think there's still a lot of cash buyers out there, so maybe after this increase that the Bank of England do, maybe that's when we sort of.
Is he frozen? Bro, you're on mute, bro.
Yeah, he's frozen.
Yeah.
He's back.
Oh, the Matrix got him. Oh, back.
Yeah, so you're probably gonna, after this rate increase, you're probably gonna start to see the effects of house prices decreasing, whether that's anywhere from 10 to 20%, etc. And then once they see this happening, then the Bank of England and UK government are going to start to step in and start really considering reintroducing QE, etc. So Andrew Bailey, the Bank of England governor, is going to be increasing interest rates by 0.5% in February, just because inflation is still high. In the 3 months leading up to November, 27,000 jobs were added. Another thing to note is, you guys are still there, yeah? Yeah, got you.
Yes, sir.
Another thing to note is the way the government actually calculates CPI, so that's Consumer Price Index, is quite flawed, such as they use a basket of goods and they keep changing it, so to suit their narrative. So, for example, in CPI, the last one, they might have used tuna, but the previous one, they might have used cod, but cod and tuna, the price that they've had in the last couple of months is different. Tuna might have been increased a lot in inflation, and they chucked tuna out, put cod in, so it doesn't sort of reflect the true level of inflation. Now over to the Fed, the daddy of Bank of England. So the Fed's going to deliver 2 more quarter interest rates hikes in Q1, and then they are potentially going to pause and let that run and see how the economy reacts to that before they sort of maybe start to introduce QE and blah, blah, blah. Now, I'm going to go over a bit about the Bitcoin, and I want to go over the Bitcoin chart. So, as you can see, so currently we're on the weekly. So from the high here, you can see it's been bearish, so it's making lower lows here, lower highs, lower lows, lower highs, lower low. Let's just zoom in. And then you see here, it made a lower low here, lower high, lower low, lower high, lower low. But now it's made its first higher high here. And also on the daily, I'd probably want it to go a little bit more higher before pulling back and going higher again to sort of get that trend confirmed. As in, have we really flipped from bearish to bullish, or is this just a trap institutions have used to sort of lure basically retail in and use that as the liquidity? So basically institutions, so if they want to take price down, then they first have to get price to go up. Retail pours in, that's their liquidity to sort of short the market. And if they want to go long, then they need to go short. So they need to go so short here before they go long here. So that's sort of a little bit TA. And on the Ethereum, hasn't really, has it? No, it's not really flipped from bearish to bullish yet. It's still in the bearish. So if it breaks this, so this is the last protected high. So if it breaks that, then you want it to make another lower low, lower high before you're pretty confident the trend has shifted from bearish to bullish. But my predictions are, so let's go back onto the weekly. So here is May 2024. So this is when the next Bitcoin halving is going to be. So you've got, so now it's January 2023. So you've got the best part of 16 months, 15, 16 months to start DCAing into BTC. And then closer to the Bitcoin halving, that's when you want to start getting into alts, because unless you're someone that really knows TA when it comes to alts, then they're just going to do little pumps here and then they're going to die down. They're going to do little pumps here and they're going to go die down. But I would probably wait until the Bitcoin halving to really start considering getting into a few of these alts. So yeah, so there's still a lot more pain to go, but with more pain there comes more opportunity.
Amazing, amazing. I would definitely agree with you there on the when you put into consideration about the Bitcoin halving, it doesn't make sense from an institutional point of view to pump the market right now. It makes sense to create a massive bear trap, destroy everybody, wreck everyone's bags, put everybody off Bitcoin out completely, and then you've got a whole year of accumulation before the halving.
Yeah. Definitely.
I agree.
So let's see. Right, great episode, guys. Thank you very much. Thank you very much for this crypto. Thank you very much, everyone that tuned in.
Thank you very much. Cheers, guys.
Bye.
Take care.